Hello, everyone, and welcome back to another episode of the Simple Money Guys podcast, where we make money simple for you. I'm Greg, and as always, I'll be joined by John and Ryan. Join us today as we discuss some of the most essential money tips that'll help you take full control of your financial future. If you haven't yet, please give us a follow on Instagram, Twitter, and YouTube at the Simple Money Guys, and please leave us a review on Apple and Spotify podcasts. It helps us a tremendous amount.
Hey everyone, welcome back to another episode of the Simple Money Guys podcast, where we make money simple for you. As always, I'm Ryan, the Money CEO on social.
I'm Greg, also known as the Daily Investor.
And my name's John at Johnny Finance.
And today we have a very exciting episode. We're going to do a deep dive into different types of personal finance apps. We're going to be talking about banking, budgeting, net worth, stock trading, robo-advisors, and then long-term investing apps. So this is going to be a very exciting episode, so why don't we dive right into it, guys?
Yeah,
so,
sure.
For banking, what do y'all use?
Yeah, so for banking, I use TD Bank. That's my primary checkings and savings account. And then Marcus by Goldman Sachs is what I use as my high-yield savings account. And then I also have a credit card with Citibank, so I utilize that as well. John, what about you?
Yeah, so I have a savings account through Discover. They're that high yield, quote unquote, savings account. I think it's at like 0.3%. But so I use Discover with their app. And then I also have Chase credit cards. So I use Chase's kind of banking app. And I would say between the two, I would say Chase is actually a little more user friendly than Discover. Even though I love Discover, I love their credit cards. I think Chase has a little bit better of an app, in my opinion. So,
Nice. Yeah, actually, I use Chase for my credit cards too, and on the banking side itself, I use Capital One for my checking and high yield savings. So pretty similar there, but I just think Chase has the best credit cards out there. So I'm with you on that.
It's funny because, yeah, Chase has really good credit cards. They have great sign-up bonuses and all that, but their savings account is like 0.01% interest, and I think that's why we both went with other banks. Like I went Discover, you went Capital One. So, yeah, definitely Chase is rocking on the credit cards and the app, but their savings account is subpar, to say the least.
I would say TD's app could use some work. It's a little difficult to navigate. I have used Chase before, and it's very clean. Citibank is very clean as well. But yeah, I mean, these are just the checking accounts. Not really too much to talk about there. What do you guys utilize for some of your budgeting or net worth apps that you use?
Well, I think we can all agree that, yeah, Chase probably has the best banking app out there. But when it comes to budgeting, there's a whole nother, type of app out there. So there's Mint, there's YNAB, there's EveryDollar. I personally use one called Spending Tracker, where I just track my spending on that. So I think Mint is probably the best one that I've used. But it's a little bit more advanced, and that's why I use Spending Tracker. That's why I recommend Spending Tracker for beginners. But I know, Ryan, that you use EveryDollar. How is that for like beginner or advanced levels?
Yeah, I think I used EveryDollar a while back, and I just kind of kept using it. I've tried I tried YNAB too, and Mint and all the other ones. I just felt like EveryDollar had the most customizations available for your budget, so it just made it easier. I tried, those were the three that I tried though: EveryDollar, YNAB, and Mint. And I did find that YNAB was kind of a little hard to get used to, and there is no free version. So that was kind of a hindrance to me at the beginning. I was like, I'm not even gonna I don't know if I even want to try this. I was paying off debt at the time, and then Mint had a free version, but I was like, there's not much customization here. So EveryDollar kind of had the free version, and it allowed me to customize. So that's what I ended up going with. Now I might consider Mint. It's pretty easy. I really like Mint too. So I think if you're a beginner though, I think EveryDollar is a really good app to use, and they have a free version. I do pay for the premium. The premium loads your transactions automatically every single month. So you just drop it into your budget category. So it loads your credit card and debit card and bank transactions. So you don't have to type everything in manually. So I think it's worth it. Um, I don't like that you do have to, drag and drop every single transaction though. It is kind of annoying. So I don't know with Mint, I think it's a little more advanced, right? Where you don't have to, manually track every single one, right?
Yeah, I mean, Mint, you can just link all your credit cards, you can link your, investments and everything like that. I think Mint, or you might not be able to link investments actually, but with Mint, I just think it's a little bit, it is advanced, which is a good and bad thing. So like when I was first starting, Mint was a little bit, complicated. And the thing with Mint is you have to use it like basically every single day to start to get used to it and start to be like, oh, okay, this is how it works. And sometimes they'll categorize transactions wrong, but you can switch those, so they'll be set up in the correct way. But I think Mint is a very powerful tool, but it's not for everyone, I would say.
Yeah. Guys, I have a very exciting announcement when it comes to budgeting. As you both know, I was typically an Excel spreadsheet budgeter where I would manually write down every single transaction of every month, but I have slowly been transitioning away from that. I realized that for 5 years I've enjoyed it, but I don't enjoy it anymore. So I recently tried to download both NerdWallet as well as Mint. And Ryan, what was the one you use? I'm gonna
Every
try
dollar?
that one. Every dollar. So I'll try all three of those, and I guess provide an update at some point.
Congrats, dude. Welcome to 2021. I like it.
I was gonna say the same thing. See, my thing, and actually I want to ping pong this off of you guys. I feel like I have so many different apps that I use now, specifically for finance related things, and they're all in a folder. But sometimes it just gets a little cumbersome and a little bit too much. Whereas when I was using the Excel spreadsheets, also I was using that for the net worth, like a personal balance sheet essentially, as well. It's all kind of in one place. Whereas now I'm probably going to use NerdWallet for the net worth, a different app for the budgeting, all my different banking accounts, all my different investing accounts, my credit card accounts. So it just gets to be a little cumbersome. What do you guys think? Do you feel overwhelmed ever? And do you wish there was like a way to bring it all together?
Actually, I think that's a good transition to the net worth app because Mint I actually use Mint for my net worth tracking. So that's why I've been thinking about switching over to Mint for budgeting, just so it's all in one place. It just will make it easier. So it's not that it's overwhelming. It's just one less thing to worry about and just to deal with. So I just like simplifying things as much as possible. Like if I have to do one less thing, I'm going to do it. So that's just kind of how I am. So I might switch over. It's just, you get so used to something, you just kind of stick with it. So I don't know. Maybe I'll try it out and see if I like it again and kind of go with it.
Yeah, I hear you, Greg. I think, with the Excel spreadsheet, it's super nice to have everything in one spreadsheet. You know where everything is. And when you're in control of it, it's really up to you to update it, and it kind of gives you that sense of control. Whereas, like if you're using Mint for one, and Personal Capital or NerdWallet or anything like that, I think it can get a little tedious to go through the different apps. But I just think do what works well for you. If you're a spreadsheets guy, stay in the spreadsheets. If you're trying to optimize every single thing, then maybe put all of your your net worth, your budgeting, your investments all into Mint or Personal Capital. So it really depends on the person at the end of the day.
Yeah, I agree. Just whatever works best for you. I mean, if you stick to your budget better and you're investing better and you have more peace of mind using a spreadsheet, use a spreadsheet. You don't have to use a budgeting app. I was just making fun of Greg. So.
Yeah, for all my old souls out there like me, I may be 25, but I got the soul of a 50-year-old man. So for all those old souls out there that relate, use a spreadsheet or pen and paper.
Yeah.
Actually, don't do pen and paper. Maybe that's what we
I think we're drawing.
You're crossing a line there. Yeah,
you draw a line there. Okay. Yeah.
Okay.
Now I think the next one, the big one, kind of. Both of them tie together, robo-advisors as well as investment apps. So I know we were talking about this before. One big investment app that I kind of started me off, that got me interested in investing, the whole concept was Acorns, and I think we all said we would kind of characterize them as a robo-advising app. And essentially, for those of you who don't know what Acorns does, there's two main advantages that I see in it that I enjoyed. They have roundup investing, so you can link it to one of your, whether it be your debit or your credit card, and every time you make a purchase, say you spent $5.50 on something, it would round that up to the nearest dollar, so it would be $6, and it would invest that 50-cent difference. So you're always investing every time you make a purchase. As a kid or teenager, that was very advantageous for me to get me investing, even though I didn't understand what it was. And the other big thing is you can select how aggressive you want your portfolio to be. I selected very aggressive as a young teenager, and then they will balance your investments in index funds based on how aggressive you want to be. Do you guys have experience with robo-advisors, Acorn specifically, anything?
Yeah, I actually was the same way, Greg. I got started in Acorns. That was my very first investment app, and my brother actually put me onto it. But what's funny is so I started using Acorns in college, where I was penny pinching every dollar. I was a broke college kid, but you didn't really notice if 20 cents here or 60 cents there was invested, because it just was out of sight, out of mind type of thing. And when you get to, you're not picking individual stocks, it's all like automatic robo-advisor, so it's really hands off, and that kind of helped me just kind of forget about it almost. And I think that's a good way to start investing. And what's even crazier is that I used Acorns from probably like my sophomore year of college, maybe my freshman year actually, all the way up until when I recently purchased my house. Like, I used my Acorns amounts to help fund my down payment for my house. So I think it's a great way to get ahead. I was investing in Acorns for probably 4 or 5 years, and that helped me get into my first home. So I have nothing but love for Acorns.
Oh, dang. Nice.
Yeah.
So fun fact, actually, I started using Acorns probably my junior or senior year in high school. And
wow.
By my senior year in college, just from those roundup investments, I was able to fund a vacation for me and my girlfriend at the time to California, which was like fully funded. And again, it's one of those, like, you don't realize that like a 50 cents, 75 cents here, a dollar here will slowly add up over time.
Yeah.
One
Especially
thing
when it's invested,
one thing I do want to point out, though, it's important, I think, still to this day, to have a .edu email. I think otherwise they charge a fee every month. So I got away with getting it for free by having an edu email. I'm not sure if you did the same thing, John.
Yeah, I did. And if you don't have an edu email, it's like $1 per month, so it's not like too significant.
Oh, okay. I thought it was a lot more. That's not too bad then.
Yeah.
I kind of tend to have a different opinion on Acorns. I'm not like anti-Acorns or anything. I just tend to think for investing, if you're investing, quarters and pennies, you're going to end up with, quarters and pennies over time, right? So Acorns is good if you want to save, a little bit, and there's nothing wrong with it, but I wouldn't consider Acorns, a good investing app to do most of your investing. I consider it, hey, I'm going to invest spare change, and that's what I typically consider Acorns. I think they have like extra fees that you could avoid in other places. I do think their user interface is easy. The idea and concept is cool, but unless you're going to consistently invest a lot of money into good funds, I don't see it as a good way to invest. That's kind of my opinion, because most people use it as spare change, and that's great. It's like that. A lot of people have, they used to save their spare change in a bucket, right? And then they go cash that in and get a bunch of money. Now you're investing it. That's a cool. It's the same idea, but with investing. But I still think when it comes to real investing, you want to use better, real investing apps. And I don't really consider Acorns like a long-term investing app that you're going to do. I consider it like spare change. So that's where I tend to disagree on that aspect of it. But I do think it's good for like the spare change aspect.
Yeah, and I agree, Ryan. Like, it's not going to be your long-term portfolio,
Hmm.
but when I was in college, like, I didn't have hundreds of dollars to
Yeah.
invest, so Acorns was like perfect in that situation. I'm actually not even still using Acorns, but I think it's great for beginners if you don't have a lot of money to
Yeah.
invest. So
Yeah.
that's a good point.
Yeah.
Yeah, I also agree. I'm long gone from Acorns, but I think getting that initial interest and understanding the concepts of if you put away money and invest it over time, it'll grow. I think that's where the main advantage of Acorns is.
Yeah,
Yeah.
and Acorns offers like they're a robo advisor as well. So I mean, you can open a Roth IRA there and pick a portfolio and actually invest monthly as well. So that's if you do want to invest long term, they do have that as well. And that kind of falls into the category of other investment apps like Betterment and Wealthfront
Mm-hmm.
too. So while we're
Yeah,
kind
yeah.
of in the category of robo advisors, Wealthfront and Betterment are in that same category. They don't do spare change, but they allow you to invest monthly, pick a predetermined portfolio, and then invest consistently into that. And they charge you a small percentage, which is a lot less than a financial advisor, but um, it'll invest in a good it'll invest in a good portfolio for you, but they will charge you higher fees than if you did it on your own typically.
Yeah, yeah. I've used Wealthfront and I like them. Betterment's probably the same thing. There's also one called Stash. They're all pretty much the same thing. They're robo advisors. They usually take about 0.25%. And so that is better than a financial advisor, but it's more than if you were doing it by yourself. So that's what I have to say about robo advisors.
I I do see a benefit, like if it, what's great about robo advisors is you could literally not know how to do anything. You wouldn't have to learn how to do anything. Their user interface is so easy, you just go and do it. But you are charged that percentage, right? I think if you're not going to invest, but you invest because it's so easy, that's better than not investing.
Exactly.
Yeah. I have a question for you guys, and we brought this up before, but I want to talk about it a little bit. Do you guys think robo advisors, artificial intelligence in general, poses a threat to current day financial advisors? Because you see a lot of these big financial institutions trying to allocate budget towards artificial intelligence robo advisors, just because they are possibly a little threatened, and they can see a future where that human to human interaction is way less, and you're just using an app and some sort of algorithm that can calculate things for you.
I absolutely think that robo advisors will replace a ton of financial advisors. First of all, especially the financial advisors that aren't fiduciaries and the ones that charge enormous fees and invest you in funds that have high fees. Those days should be gone already. I think that's just robbery and borderline unethical. I think it's unethical. It should be borderline illegal, in my opinion, because a lot of these financial advisors will charge you 1 to 2%, and then they'll invest you in a fund that charges 1 to 2%, where they have big kickbacks. So you're being charged 2%, and they're investing in something that underperforms the S&P 500.
Right.
So if you just took your money, invested in S&P 500 index fund, you would do 2%. You do more than 2% better than this stupid financial advisor. So, so this is why I don't like financial advisors that charge a percentage. Most of them are just salesmen, saleswomen that are just there to take your money. That's what they are. Now, fiduciary financial advisors that charge a dollar amount per transact, like an hourly fee or a project fee, that's different. Those, they're charging for, flat fee advice, that's different. But the ones that are taking a percentage forever, they need to go. And if robo-advisors replace them, I'm all for it, 100%. Because, I mean, they charge a small percentage, they will invest for you better than these financial advisors, and they'll save you so much money.
Yeah, I agree. I think for sure robo advisors will definitely eat into some of the quote unquote market share. Personally, I do also see, wealth management, holistic financial planning still staying a thing. That's something you want to talk through with someone, planning out your children's futures, everything, estate planning, everything like that, that I don't think a robot can ever reproduce. And, I do use a financial planner and I see the value in that. But overall, robo-advisors as a means of just investing for the average layman, probably going to be a huge part of it in the future. I agree there.
Yeah.
Yeah.
What also is kind of which we'll kind of talk about in a little bit, right? The other side of the coin, right? Robo-advisors make it easy to invest, but they're investing you in good funds, good ETFs. There's the other side of the coin where you have these stock trading apps like Robinhood and Webull, and even public, where you're just buying. You can go buy a stock of any company and think you're just an investor and a professional all of a sudden, and all these people go and lose a lot of money. I think that's the other side of the coin where it's so easy to invest now. It's probably worse than a financial advisor.
Yeah, well, let's take a deeper dive into that. Let's start talking about the investment apps and how they've changed over time and how they've kind of targeted this new demographic of people who aren't familiar with investing, but they have such a simple layout and such an accessible accessible features that allow the average person to invest money without really knowing what they're doing.
And definitely stay tuned to the end where we're going to talk about our actual favorite investing platforms where we think you should invest your money to actually build wealth. So, let's dive into these stock trading platforms.
I think the two biggest ones are Robinhood and Webull. I think everyone is familiar at this point what Robinhood is. If they haven't used it, they've definitely heard of it. They've heard of all the controversy. It back in the GameStop days or whatever, that's when I think people started to awaken to what Robinhood really was, and what their intentions were. They brought this commission-free, as I do air quotes, trading, which kind of went market-wide. But they, overall were kind of just trying to target almost aggressively and, unethically this group of people to, and they made options trading so easy, taking out margin for
that's got to be
investments
one of
so
the worst.
easy.
That's got to be one of the reasons I hate Robinhood the most is margin.
It's crazy.
Okay,
it's crazy.
For those who don't know what margin
Ryan,
is, it's allowing you to borrow money to invest. That's what it is. And
you're taking on a loan.
You're taking on a loan to invest, and you could go invest in anything. You can go invest in something stupid like if you're taking out a loan on a house, they really verify that house is worth that amount of money, and it's going they really make sure that it's a viable investment. With this margin, they really don't. You could easily go lose 100 grand, 200 grand, 300 grand without knowing what you're doing. It's absolutely ridiculous.
Yeah. I mean, with GME, AMC, Dogecoin, people ran to Robinhood and then took out margin loans to go invest in these pump and dump companies, and Robinhood just let them do it. And when they tried to sell, they kind of paused trading. They do a bunch of slimy stuff, in my opinion. I think Robinhood's very sketch with that. Another reason why I don't like Robinhood is that when you got your free stock, if you invite someone, you get a free stock and they get a free stock, you get a little scratch off lottery ticket where you scratch it off and then it's boom, little confetti and celebration.
It's a $2
they're
stock.
playing to that yeah, exactly. They're playing to that gambling, almost instant gratification that we're all addicted to. And so when you get 16 or 18-year-olds, getting onto Robinhood and buying into these pump and dump stocks, using margin loans and getting scratch off tickets, it's bad news. And that's why Robinhood is definitely not my favorite app.
God, I hate Robinhood. And
I think catering towards that gambling attitude has been a big problem for a lot of different companies. Like something else I think of, I don't know if you guys have ever played NBA 2K. I played it back in the
Yeah, of
day.
course.
They started to get really popular with like opening packs of player
Right.
cards and everything. And if you think about it and go back in time, like, when we were younger, like there were playing cards that we would purchase. And it's that same mindset of you don't know what's in there, but you want to keep buying them because you want that ultra rare thing.
Mystery boxes, yeah.
And it's just we don't even realize, but it's been programmed in our minds from such an early age, and that's not necessarily. I mean, it's a bad thing, just straight up. But yeah, Robinhood definitely caters to that gambling, risk taking, shooting for the moon aspect in
And
investment.
payment and Robinhood trades aren't free. They use payment for order flow. And basically what that means, typically the brokerage should have an obligation to get you the best trade, the best, trade for you, but they don't. They do what's most profitable for them. And that's how they make money on the back end. And kind of they ultimately
they want you to trade as much as
ultimately
possible.
screw over you, the investor. So Robinhood, I mean, there's a lot of slimy stuff that they do, and I just, especially the stuff that happened with GameStop.
I think the one good thing these apps did is generate an interest and a knowledge on what investing is for a new crowd of people that didn't necessarily understand or, even care before all this. And, maybe some of the listeners started off on Robinhood and they've realized it's not the best platform, but now they're willing to generate and build wealth over time the correct way. So I guess, a little opposite side of the perspective, they might have, brought a new crowd into the world of investing, which, for the listeners out there, maybe that's a good thing. But overall, I agree. Yes, like scumbags looking to just maximize profit and at the cost of the user.
Yeah, so I don't think we're fans of Robinhood or Webull. I also think Webull just has a worse user interface. And then Public, I think Public has a cool like social media aspect to it. But again, you're just buying individual stocks. It's more just like a speculative pick of stocks, and you can, brag to your friends if you made a good gain or something like
95%
that.
of people that are on like these platforms don't know what they're doing. They really don't. So like, it's just the truth. And 80% of statistics are made up. So that number's off. But I would bet money that 95% is probably pretty accurate.
All right. So do you guys want to transition into how about for simple money tips this week, we can each talk about what investment apps we use and why we like them.
Yeah, let's do it.
Okay. I could go first. So I use 3. I use TD Ameritrade, I use Schwab, and I use Fidelity, all 4 different accounts. I originally started with just TD Ameritrade. The reason I really liked TD when I was first starting is I felt like, and I looked at a lot of reviews and everything, they provided the best information on stocks. There's a page where you can quickly access, some of the company ratios, things like that. This is back when I was more of, an active investor rather than just an index fund investor. So that was very advantageous. Their customer service to this day, I will say, is fantastic. If there's ever a question or, issue I have, even back when I was starting, I would call them. This is embarrassing. I would call them up and be like, what's like a profit margin? And they would explain these things to me. So that is top tier. And for that, I'll always be a little loyal to TD Ameritrade. I did start to realize they have, fees, like reallocation fees and everything for, buyouts or mergers. So I did branch out to Schwab and Fidelity, where Fidelity I have my Roth IRA now. And I would say they're all comparable. I think TD's cutting back on its fees. So once they do, I think they already have. I'm not 100% sure, so don't quote me on that. Once they cut back on the fees, I would say they're all pretty equal. Fidelity has a little bit of a cluttered interface, and we've talked about this before. To me, it's a little bit hard to know where you want to get. So sometimes it's easier to start on one of the more simple apps where you know where you know what you want to get to, you know your destinations, and then when you switch over to a more cluttered app, you'll know where you want to get to, but you might not necessarily know how. But Fidelity has some of the best index funds available, so that's the reason why I use it for my automatic investments in my Roth IRA. And I would say Schwab is on the opposite spectrum. It's just so simple and so clean, so easy to use. I feel like anything I want to get to, I can get to. But yeah, those are the three big ones I use. What about you guys?
Yeah, I actually haven't tried Schwab before, but I have heard good things about the user interface is nice, it's clean, and I would tend to agree. You know, Fidelity does have somewhat of a cluttered interface, but that's where my Roth IRA is, and that's what I recommend to most people if they ask. It's still a good app. You know, I still have nothing but good things to say about Fidelity, other than maybe a cluttered app. So. I use Fidelity for almost all my investments. I also use Wealthfront too. I think Wealthfront is the super simple, robo-advisor for beginners. And then going into like the budgeting apps, I actually use, the spending tracker. It's just called spending tracker. Super simple, super easy to use. And then also I wanted to just bring this up real quick. I also use Coinbase for crypto. That's another investing app, we could just talk about real quick, but, I don't have a lot in crypto at all, but I think Coinbase has a very nice app, a nice user interface. They do have high fees, which I don't like, but I haven't found a crypto app better than Coinbase. What about you, Ryan? What are your GOAT investing apps?
So I've actually tested all the three big ones: Fidelity, Charles Schwab, and Vanguard, and they're all fantastic. So if you use any one of those, you're golden. So here's kind of my take. If you want to invest in individual index funds, Fidelity or Charles Schwab is the way to go. If you want to invest in a target date fund, Vanguard is number one. Fidelity has decent target date funds, so if you're at Fidelity, they have good options too, but Vanguard's number one. I personally invest at Fidelity for my personal investments, and then at Vanguard for my business investments. And the reason is Fidelity doesn't offer a Roth 401k, solo Roth 401k, so you had to do it at Vanguard. So that's the only reason I'm at Vanguard. Otherwise, I would have stuck at Fidelity. So if you're just a personal investor, you want to do your Roth IRA, your brokerage account, Fidelity, I think would be my number one choice. And then number two, it would be my number one choice if you're doing individual index funds. And then if you're doing a target date fund, Vanguard would be number two. And so a target date fund, for those wondering, is basically you invest in one fund. And this fund is like a fund of different funds, and it automatically gets more conservative as you get closer to retirement. It does all the work for you. It automatically adjusts. It's kind of like what we talked about with the robo-advisor, right? It picks a portfolio and shifts for you and does all the allocation for you based on your age. So this is a really good option if you want to be completely hands-off. And Vanguard has the best ones, in my opinion. So if you're going to do it, you're going to do it I think Vanguard's the best. However, Vanguard does have kind of a weird user interface. It is a little hard to use.
They're boomers over at Vanguard.
They are fantastic funds, but man, their user interface sucks. So you kind of want to figure out how to use it, automate it, and then not look at it.
You want to know what you're getting into. You want to know how to invest before you get into the more clutter, because then you're going to just get overwhelmed and not want to do it.
That's why, in Fidelity and Schwab, they're both so much better. I'd say Schwab, it's probably a little easier. It is a little easier to figure out, but they're both still pretty user-friendly compared to Vanguard. Vanguard's just it's just on a different level. So if you want to invest in individual index funds, like I said, I would just go with Fidelity probably. I think they have the best funds, although Charles Schwab has great funds too. So summarize.
I agree, Fidelity.
Summarize, individual funds, Fidelity or Schwab, with Fidelity having the edge. And then if you want to do a target date funds where you're completely hands off, go to Vanguard.
Yeah, awesome. But that's all of our information, what we use, and I think that about wraps us up for this week. As always, we are the Simple Money Guys, making money simple for you. I'm Greg, also known as the Daily Investor.
My name's John, at Johnny Finance.
And I'm Ryan, the Money CEO on social. Thank you so much for joining us, and we'll see you again next episode.
Thank you everybody for listening. As always, give us a follow on Instagram at The Simple Money Guys, subscribe to us on YouTube, and be sure to tune in because we have new episodes coming every week.